exactly. So annuities, right? These things can get pretty complicated.
Yeah.
But hopefully today we can sort of break down at least one of them and
Sure.
maybe give people listening a little better idea of if it's right for them or not.
Absolutely.
So we are talking about the F&G 123 Fixed Indexed Annuity,
Okay.
and we are looking at some marketing material from Diversified Insurance Brokers.
Right.
And I think it's a good one to look at.
Yeah, I think so too, because it kind of hits at the heart of that question. Everyone's going into retirement. Like,
Right.
is my money going to last?
Exactly. And this one claims to offer, this guaranteed growth, tax-deferred savings, like all that good stuff that you know, right?
Right.
So to start, I guess the big question is, what even is an annuity?
Yeah, so basically it's a financial product where you can put a lump sum of money in and it'll pay you back like a stream of income over time. So
Okay, so almost like a pension, almost.
kinda, yeah.
Yeah.
And that can be really helpful for retirement planning, obviously.
Well, and I guess that's kind of the whole point, right?
Exactly.
So with this particular annuity, the F&G 123, you have these two income options, right?
Mm-hmm.
You've got anytime income and you've got future income. So I guess tell me about those.
So anytime income, that just means that you can start taking withdrawals as soon as the policy is issued.
Oh,
Whereas future income, you have to wait at least 10 years.
okay.
But the trade-off there is that if you wait 10 years, you can potentially get a much bigger payout.
Okay, so it's kind of like choosing, I'm trying to think of a good analogy here, but like choosing like
Yeah.
a small guaranteed paycheck, like, every week or whatever,
Right.
versus like investing all that money and maybe it does really well, maybe it doesn't.
Exactly. Yeah, it's all about your risk tolerance.
Right. Okay, I like that analogy.
And how soon you need the money.
Yeah, exactly.
Yeah.
And so they talk a lot about this guaranteed lifetime income. And that sounds amazing, but there's got to be some caveats there.
Well, the main thing to understand with that is that the lifetime income rider, it basically guarantees you a paycheck every month for the rest of your life,
Okay.
no matter how long you live.
Okay, that's what makes it guaranteed.
Exactly. And I was talking with a friend actually who's nearing retirement age.
Yeah.
And they were so stressed about,
Yeah.
what happens if my money runs out? What if I live too long?
Right.
And so this whole guaranteed lifetime income thing really took a lot of the pressure off.
Yeah, just knowing you're not going to run out of money.
Exactly.
That would be huge.
Huge peace of mind.
But what if I don't know, what if I don't want to say an emergency, but what if you need some of that money
Yeah.
before retirement? Do you have any flexibility there?
So after the first year, you can take out up to 10%
Yep.
each year, penalty free.
Yeah.
And then they also have some waivers. So if you have to go to a nursing home or something,
Yeah.
or God forbid you have a terminal illness or impairment,
Mhm.
something like that, then they will waive the withdrawal penalties.
But what if you need more than that 10%? Like, what are those? They mentioned surrender charges. What does that mean?
Yeah, so basically a surrender charge is just a fancy way of saying a penalty.
Okay.
So if you take out more than that 10% before a certain amount of time, they're going to hit you with a penalty.
Okay.
And then there's also this thing called a market value adjustment, which just means that if the market's doing really badly,
Uh-huh.
you might not get all of your money back if you cash out early.
Oh, interesting. So it is tied to market performance to some degree.
To some degree, yeah.
Okay, so there are some trade-offs to think about there.
Mm-hmm.
Now, this next part, market participation with downside protection. That sounds like having your cake and eating it too.
Right. It sounds a little too good to be true,
Yeah.
but basically the way it works is they're going to link the potential growth of your annuity to the performance of these different market indices.
Okay.
So one of the ones they talk about is the S&P 500. So that tracks 500 of the biggest U.S. companies.
Right.
And so your annuity is going to, have the potential to grow along with that.
Okay.
But the difference is that if the market takes a nosedive, your principal is protected.
Oh, so you get the upside.
You get the upside without the downside.
Okay, so it's like you're on a roller coaster, but it only goes up.
Exactly.
Exactly.
All right, I like that. All right. So you die, what happens to all that money?
So when you pass away,
Mhm.
your beneficiaries
Yep.
get the full value of your annuity
Okay.
without any of those surrender charges or anything like that.
Okay.
And they can even choose to have it paid out as a stream of income if they want.
Oh, okay. Interesting. So it sounds like your loved ones are definitely taken care of. But this all hinges on the company being stable, right?
Right.
Fidelity and Guaranty Life Insurance Company.
what should people be looking at when they're trying to figure out if an insurance company is legit or not?
Yeah, well, I mean, they do say they have a strong reputation, but of
Mhm.
course you always want to do your own research.
Right.
So look at independent ratings.
Okay.
There are these agencies like AM Best, and Moody's, and Standard and Poor's,
Mm,
and they basically evaluate an insurance company's ability to pay its bills.
gotcha.
And that's really important when you're talking about a long-term investment like this.
Right. You don't want to be stuck with a company that goes belly up.
Exactly.
So to sum all this up, this F&G 123 fixed indexed annuity, it gives you some potential for market growth, but it protects you from the losses.
Right.
You've got that lifetime income option, which is really nice, and a little bit of flexibility in how you withdraw the money.
Exactly.
But of course, there's going to be some trade-offs with anything.
Of course. Yeah.
So I think the big question that people listening should be asking themselves is, like, what's more important to them?
Yeah, like do you prioritize that guaranteed income? Right.
Even if it means potentially limiting how much your money could grow?
Hmm.
Or are you willing to take on a little bit more risk
Yeah.
to try to chase those higher returns?
Right. That's a good point. There's no right answer, I guess.
There's no right answer.
It really depends on your situation.
Exactly.
Well, this has been really informative. I feel like I learned a lot.
Yeah, me too.
Hopefully everybody listening did too.
I hope so.
And yeah, I guess thanks for taking the time to walk us through this.
Yeah, of course. Anytime.
And we'll be back again next week with another deep dive into, who knows what.
Some other exciting financial product.
Exactly.
Yeah.
So until then.
See you later.